City Manager, you may proceed.
Thank you. Good morning, everyone. This is Sharon Lynn, City Manager of the City of Rehoboth Beach. Calling this meeting to order, meeting of the Audit Committee at 11:25, Friday, October 29th, 2021. I apologize for anyone attending the meeting and those who are listening in. We've had some technical difficulties, and the chair of the committee, Mr. James Horty, is not on this call. So we do have a quorum. We have two new members, Mr. Pearlstein and Mr. Little. If you could just raise your hand, please. Mr. Pearlstein, Mr. Little, thank you very much. Two new members appointed by the mayor and commissioners. And also in attendance is Mr. Bert Dukes. Bert, if you can raise your hand. Thank you very much. Mr. Dukes is the city's Director of Finance, and Jeff Kowalczyk is the partner from Barbicane Thornton, who's been with the city in and out for over 10 years, auditing the city's accounts and now playing a very, very important role in this on an annual basis. So I'd like to turn the meeting over to Jeff and Bert, if you have anything to say first.
No, I think Jeff can go ahead.
Okay, thank you, Jeff.
All right, well, thank you so much for having me on here. Sharon, thank you for that introduction, and members of the Audit Committee, thank you for having me out to present the results of our audit for the year ended March 31st, 2021. This year, as with the last couple of years, the City of Rehoboth Beach has had not only a financial audit, but also a single audit in accordance with the federal uniform guidance, because the city has expended more than $750,000 that originated at the federal government level. Because of that, one of the nice things that the audit document has in it, for anyone following along, in the document it's on page 65, but it is a nice summary of the audit results. So the goal of our audit is to issue an opinion on the fair presentation of the financial statements, and also because of the various government auditing standards regulation and the uniform guidance, we are issuing opinions over internal controls for financial reporting and internal controls over your major federal program. Page 65 indicates, and I will affirm, that we issued unmodified, clean audit opinions on both the financial statements and compliance with your major federal program. Additionally, we did not identify any material weaknesses, significant deficiencies, or other non-compliance. So truly a clean audit. As CPA auditors, that's the highest level of assurance that we're able to provide on a set of financial statements. I'm also pleased to let you know, as both of you are new to the committee, we have, last year we had a recommendation regarding the city's interfund balances, where the general fund, the water fund, the sewer fund, each owed each other some money, and we recommended truing those up and minimizing the interfund balances to ensure that each fund is truly reflecting its own proportionate share of cash on hand and revenues and expenditures. And I'm pleased to report that that was done to a significant degree. There are still interfund balances outstanding, but that's primarily active interfund balances. In particular, you may have seen in the financial statements that the Capital Projects Fund, which had been established at the time the City Hall project was started, but which had remained dormant in its completion, was trued up and closed out in the current year.
So Jeff, I did see in your management letter that there was it's $2.3 million
Yep.
still outstanding in March. Can you go into a little bit more detail about whether that is simply business as usual in terms of money going in and out, or is that a more of a perpetual situation of the fund? I think it's the water fund that is owed money.
Yep. So that is I would say it's somewhere between, where it's much of it is the ongoing true nature of the interfund balances. The city uses a warrants payable system where all checks are processed through a single account. And so the funds pay each other as needed to true up those balances. Where there are, after year end, known expenses coming from one fund or the other fund, those interfund balances may stay open to try to minimize the number of transfers needed to be done and to keep appropriate balances in each fund. So it's one of those things that I think the number that's there now is perfectly reasonable. It's something we monitor because it is a place where cities that operate many different activities, where you have your general fund that tracks your ongoing city operations, but also the water and sewer funds, especially knowing that there are major capital projects ongoing, especially within the sewer fund. We're continuing to monitor to make sure that those interfund balances stay within norms.
Thank you.
Absolutely.
Jeff, I have a question. Were you able to do the audit on site, or did you have to do it virtually?
Yeah, so we had the benefit of being able to work in a hybrid situation where we came on site to perform certain tasks, but we were also able to work with the IT department to set up a secure external channel to access certain elements of the accounting software to be able to do some of our work remotely. So we were really able to balance it in a way that we feel maximized the effectiveness of the audit and the efficiency without losing that in-person face-to-face that I think is very important to an audit and can get lost when audits are done primarily remotely.
Thank you.
Yeah, you're welcome. To give you an idea, because I'm not sure how familiar each of you are with government accounting and government financial statements, after our auditor's opinion, which is on pages 1 through 3, is a management's discussion and analysis section. This section isn't audited per se, but we do compare it to the audited financial statements to ensure that it's consistent and that the required elements under the government accounting standards for management's discussion and analysis are included. So primarily this makes sure that there's discussion about the funds level, there's discussion about your entity-wide level, your capital activity and your debt activity, and that there's nothing that's overtly political or argumentative in the document. My recommendation for anybody who may be listening to this that is looking for a place to jump into the financial statements and really start to understand the city's operations, the management's discussion and analysis is written in a narrative format, and that usually makes it a little bit of an easier place to start. And then you can look to the statements and notes for details on the elements that are of particular interest.
Can we ask a couple of questions?
Yes.
I did have a couple of questions coming out of the MD&A. I think they're likely directed at Bert. Is this a good time to do that?
Yeah, absolutely. I always like to keep the communication flowing, and I think the questions are best answered if they're sort of at the time we're all thinking about them. So absolutely.
I noticed on page 7, I'm using the page numbers at the bottom, that the investment earnings fell really quite significantly, I think from several $100,000 to look like maybe $10,000. It's on table 2 under investment earnings. In governmental activities, it was $5,300 in 21 and $115,000 the year before. In total, it dropped from $210,000 to $10,000. Bert, you explain a little bit about what happened there?
Well, probably the biggest attributing factor was lower interest rates.
Bert, I'm having a hard time hearing you.
Can you hear me now?
Yep, that's a lot better, thank you.
Okay. You can attribute most of the reason to lower interest rates. We had a pretty good rate with WSFS for a while there, and most of that investment income is CD interest, and it's dropped to nothing. We're considering, options to go ahead and increase those rates, and I think the markets might be solving the problem partially, but that's the primary reason.
Okay, thank you. Since we're in the same area, on the next page, Bert, there was a big drop, actually a big increase in the amount that the taxpayers financed under governmental activities on page 8, rising from 36% to almost 54% in terms of governmental activities. Could you explain a little bit about what happened there?
Well, basically, the government had a lot more revenue than we anticipated, and I think that some of that was from our transfer tax, which we had budgeted for 1.6 million, and it came in at over 4.2 almost. So as bad as the pandemic was, our general fund fared very well, and so.
Yeah, and I can provide a little more information on that. One of the big elements of the charges for service to directly offset expenses that are not taxpayer funded is the parking revenue, and that did see a significant decline. On page 48 is a budgetary statement, and on that statement, I have it up so you don't have to look, but the total charges for service were down about 1.5 million, of which parking meters was 1.3 million of that. So in the absence of the parking meter fund to directly offset certain expenses, that's why an additional portion was considered taxpayer funded through general revenues. And it should note that taxpayer funded doesn't necessarily just mean direct property taxes. It can also include things like general grants from a state agency that aren't specified to specific operating elements.
So the transfer tax is considered taxpayer funded?
That's correct.
Okay, great, thank you.
Absolutely. Any other questions on the management's discussion and analysis? Okay. So following that document, the next section are the financial statements proper, and they begin with 2 pages that look at your organization as a whole at the entity-wide level. And these 2 statements, unlike your budget, are done on a full accrual basis. So for all of your funds, for all of your activities, this looks at you at sort of the same level you would look at a business, where all of the capital assets are reflected as assets, all of the outstanding debt is reflected as a liability. Under government auditing standards, you also are required to reflect a net pension asset or liability, as well as a net other post-employment benefit liability, to the extent that the amounts set aside in trust for pension or other post-employment benefits are actuarially considered under the threshold for future payments. So you'll see that your net pension liability is very tiny. The pension liability there is related to the state of the city's portion of the state of Delaware Police and Firefighters Plan, which continues to be very well funded. To give you an idea, I think the plan is 98 or 97% funded. Average municipal plans are probably 70 to 75% funded. So this plan is is reflected on here, but is a plan that is well funded. Good morning, Mr. Horty. And to let you know, the other post-employment benefit, you'll see that's a little bit of a larger liability. And the reason for that is the city, like most governmental entities, funds the other post-employment benefits on a pay-as-you-go basis. So they don't set aside funds in trust. And that's pretty consistent industry-wide. So that is why that number is a little larger. But all in all, you will see for the year ended March 31st, 2021, your total net position as a city was 61.5 million compared to 57.3 million in the prior year. The largest component of that is your net investment in capital assets, which is about 38.7 million, but you do have about 22.6 million that is unrestricted net position. Now, much of that is unrestricted net position that is intended to be used for part of your long-term capital plans. So, and we'll talk about that a little more as we look at the funds. But it does include both the funds available in your governmental activities and your general fund, as well as the water and sewer fund. And on page 17, which looks at your entity-wide statement of activities, this kind of gives a little more information about how program revenues that directly offset expenses versus general revenues that do not are reflected. And so you'll see, to kind of go back to the thing we were talking about before with the general revenues, aside from taxes, franchise fees are probably the next largest element of general revenues, but they are a relatively small portion. But this is where you can see that information. And you'll see this is a year where both the governmental activities and the business type activities saw a modest increase in net position. Now, following that statement are the fund level statements. So for governmental funds, your general fund, as I mentioned, the capital projects fund, which was closed this year, and also your non-major governmental funds, which consist of some grant funds for certain police grants, as well as your highway aid fund. This looks at your organization at a modified accrual level. So it looks at near-term resources and near-term expenses. And you'll see that as of March 31st, 2021, the general fund had about $10.6 million in available fund balance. Your capital projects, of course, is zero, and the non-major governmental funds are generally pretty small because money comes in from those grants, money is spent from those grants. So that is what you're seeing there. Looking at page 20, you'll see in the general fund that the general fund this year, as you know, did, as I mentioned, use the transfer to close out the capital projects fund. And after accounting for that transfer, ended the year with a decrease of about $1.4 million in the fund balance. As we discussed, on the revenue side, there were certain items that were above budget. There were certain items that were below budget. And on the whole, I believe your revenues ended up a little above budget, which is what lets you close out the transfer with the capital projects fund without having a overly deleterious effect on your fund balance. You can see that if you look at the expenditures, most expenditure areas were pretty consistent with the prior year, with the one increase being in capital outlays. As I mentioned, that was an area that you have a 5-year capital plan, and you did follow that this year. Capital projects were actually a little above the budget as funding was available to do certain projects this year as opposed to deferring them. And then any questions on the general fund, the governmental fund statements before I go on? Because I know I'm throwing I'm at the part where I'm throwing a lot of numbers out, so I want to make sure I'm not.
No, it all seems clear.
Yep. Okay. Excellent. So then, starting on page 22 are the proprietary funds, which are your water funds and your sewer fund. And you will see that the sewer fund especially is your largest fund because of the value of the sewer system. So you'll see that the sewer fund has assets of about $59.6 million at March 31st, compared to about 17 million in the water fund. And those two funds together increased about $2 million this year, primarily due to capital asset additions. On the liability side, you'll see that you were relatively consistent. Total liabilities were 47.9 this year, 47.9 million this year, compared to 47.2 in the prior year. This year, the city did finish drawing down on some of its debt for the sewer fund project and started to pay it back. So you had a final drawdown and then a start for repayment in the notes and bonds payable. The end result is that the city's net investment in its capital assets as of March 31st, 2021 is 12.2 million. And its unrestricted net position available for future use is 16.5, which is about evenly split between the water and the sewer funds. And then on page 23, we have the statements of revenues, expenses, and changes in net position. Those numbers were relatively consistent. Repairs and maintenance expense was down. Charges for services were up this year. And then interest expense, of course, was up. As I mentioned, the bonds going into repayment mode increased the amount of interest due. So you'll see, by and large, the sewer fund had a slight decrease in net position, whereas the water fund had an increase this year. You will see there's a capital contributions line in the sewer fund. Just to let you know, that is the result of a project between the city and the county, where the county is contributing certain components as part of a project, and that's where that gets recognized, because at the end of the project, the facility is the city's. So just to kind of give you a little more information about that. Beyond that are the notes to the financial statements. They provide a little more information about the city and about its operations, and provide more detail for the financial statement numbers. I won't go into too much detail on any of them unless anybody has any specific questions, but if anybody does, I'm happy to go through them. Note I, which is on your pension plan, tends to be one of the most complicated notes because it does have a number of actuarial considerations in it. So if anybody had any questions on that or questions about the plan, that is probably the place you would want to look for that.
I had a question on note C.
Yeah.
Which is on page 31.
Yes.
And the question I had there, it sounds like we have all of the funds, which are substantial, in a single bank if there's one $250,000 insurance fund, because that's the FDIC limit. I see that they are secured by government securities. The question I have is, has somebody looked at what those securities are? For example, I think everyone on this call knows, a 30-year government bond, which sounds like it's really totally secure, is among the most volatile investments you can have if interest rates go up, which is where a lot of the betting is. So I just wanted to highlight the question, in whether this goes to Bert or Jeff or Sharon, as to whether someone has taken a look at what the maturities are of the securities that are backing up whichever bank we have the funds in, because in the event that we did have to look to that collateral, if it were long-term governments and interest rates have gone up, we could end up while we have a face coverage, we in fact would not be able to liquidate them for par.
Bill, I can answer that question. As part of the collateral agreement with WSFS, they submit on a monthly basis a collateral report listing their securities and the market value of those securities. And well, the value of the securities, the market value at the time, exceeds what we have on deposit with them. And those securities are not fixed. They can, basically change. So as far as checking what the maturity of each one is, that would be changing on a monthly basis. But I can investigate a little bit more because I'm not sure the collateral report even includes the maturities. In fact, I know it doesn't.
Yeah, well, if it's mark to market, Bert, then you should be okay, because if if interest rates are going up and if they have fixed rate long-term debt, the market value of that will be going down, because that's what happens if interest rates go up. So if they're marking to market monthly, I think that would largely address the question that I'm raising. That's a pretty frequent mark to market. I don't know what you think, Jeff, or anybody else on the committee, but I was an insolvency lawyer, so I worry about such things. So the key would be that it is mark to market and that we're comfortable with how they're doing that, and making sure we're keeping an eye on that, particularly if interest rates do start to go up.
Yeah. Right. Well, as far as the composition of the portfolio, most of it seems to be U.S. government agency securities.
Yeah, but as I said, and I don't want to belabor this, the U.S. government 30-year debt will get paid, but we would not be able to liquidate it for par if it's recently issued, or if it was issued 2 or 3 years ago when interest rates were really low, and interest rates start to go up a year or two from now, and if the bank were to fail, we are not in a position where we can wait 25 years to for that to be paid off at par.
Right.
I'm sure I'm telling something that everybody here knows, but I just wanted to I did see that there's a lot of money at the bank, and I'm aware of the how they do post collateral for it, and I obviously was not aware that you were marking to market every month.
Yeah, and I can provide a little additional information because as part of our audit process, we confirm that collateral with the bank, and the report that they sent us actually does include the maturity date. So the maturity dates as of March 31st, 2021 ranged from as soon as 2022 all the way through 2046. So it is a sort of a cascading renewal, and they do, when we get the reports annually, the funds that they hold in year 1 won't be the ones that they have in year 2. So they do actively manage that to ensure that they are meeting the requirements, because I believe they are regulated pretty heavily on that.
But
Absolutely.
the question isn't that, are we sure we're going to get our money back, using Bill's question, at any given time? In other words, could we lose money on the deal?
Well, if you had, you just take Jeff's example, Jim. If you have a 2046 debt that was issued in 2016, was 30-year paper, and it issued at 2%, and if interest rates go up to 3%, that the par value, the market value of that is obviously not going to be $100. It's going to be less than that. Bert's saying they are marking to market every month. So if they are doing that and we have excess collateral for the amount we have in the bank, we should be okay on any given point in time if the bank were to fail and we had to look to that collateral. We want to make sure that They stay to it, that they are doing it every month, that we are checking it, and that we're comfortable how they're coming up with the mark to market. But as if it's WSFS, they're, as Jeff said and Bert said, they're highly regulated, and I'd be comfortable with how they're marking the market. But it is the key issue would be long-term debt in a rising interest rate environment cannot be liquidated. When Sharon needs the money the following month, the fact that it's due in 2046, that doesn't do her any good. She's got to liquidate it, and you will not be able to liquidate long-term debt at the face amount if interest rates have gone up.
But if you're marking your market, Bert, don't they have to value using Bill's example, the 2046 bond, let's say it's worth 50 cents on the dollar. Don't they have to put a lot more bonds in there to be able to mark the market and satisfy our needs?
Yeah, there is, it's about, I believe the agreement includes about 10% more than what the actual deposits are, as for market value of the securities.
Question.
That gets adjusted monthly, right?
Yes.
Okay.
Your point's clear, though, Bill. I understand exactly what you're saying.
Okay.
I mean,
all right, thank you. Thanks, Jeff. I wanted to I read it as I saw it and wanted to mention it.
Absolutely. And that's the great thing about having a newer person join the committee, is you have a different perspective and are able to bring things out that we haven't talked about in recent years. So I really appreciate that question.
Well, bankruptcy lawyers tend to be downers. So it's okay.
Honestly, we're not much better as accountants. So at this point, I'd like to open it up to any general questions that anybody may have about the financial statements or about the audit. Mr. Horty, I know you weren't here for the beginning, so if you wanted me to jump back, the first thing I had said was all clean audit opinions, no material weaknesses, no significant deficiencies.
I read the report and everything, so I'm all right. I can get anything I need from Bert. I'd like to ask one question, which is not directly related to the audit. In the issue of the money that the city spending to support the president, which I don't object to or anything like that, but his home here in Wilmington is having about $500,000 worth of work done, which is being paid for, which they're all being paid for. The one in Rehoboth is going to have a $450,000 wall put on it. So my question, I guess, is what does the city have to do to get paid for what the city's putting into either taking care of the president and however that is, including the office space and so on like that? Has that been pursued at all?
Are we talking about the two payments of $432,000 in the most recent distribution from the federal government?
No, I'm not talking about. I'm talking about they're doing work. I'm not objecting to any of this. I'm just trying to see if we're being treated differently than other people are. For example, he comes home every weekend to Greenville, and this county has to put up all the barricades and do everything like that. My understanding is they're being paid for it. As far as when Rehoboth are giving the Secret Service office space and what they're doing, is there any way we could reimburse for that, or is that we're just doing that as good citizens?
Well,
and
I don't think we'll ever get full reimbursement. I mean, as far as what the police department does, I think they submit for reimbursement for some of the things, but I'm sure that there are a lot of services that our police and our rescue people and public safety people do that we don't get full reimbursement for.
What I'd make a suggestion, if I may, is that you have the chief call county police here and see how they're getting reimbursed. County police in Newcastle.
Yeah, well, I think the chief's, I mean, he's really, I think, pretty detailed, pretty much on top of that. But,
okay, that's all.
But I get your point. You know, we want to make sure that the city does get as much reimbursement as we possibly can for these services.
The second question I have is part of the audit, or Bert, can you tell me, the agreements we have, like with North Shores and Henlopen Acres, are they being up to date and followed?
As far as their participation in the wastewater operation.
And the water billing and so on like that, yeah.
Yeah, there's nothing that's really different. I mean, the only thing that I think is helpful to know is that they share 40% of our debt, and essentially you see is on our financial statements, while we have $40+ million of debt in the wastewater fund, you can gain a little bit of comfort because while the debt is the city of Rehoboth debt, that the county is paying 40% to service that debt, which is where the capital contribution comes in on the wastewater financial statements. So, yeah, as far as the billing and the operation and the arrangement, as far as payments, everything is in order.
Don't we provide them water and maintain the lines for them too?
We do. We have an agreed upon procedures report, which I prepare and submit to Barbara King Thornton. And basically the purpose of that report is to allocate the O&M costs between the city, Henlopen Acres, North Shores, and Dewey Beach. And each one has a little bit of a quirk to the calculation, but I mean, essentially this is a flows-based calculation where our starting point is to take the actual flows that each entity used and then allocate the cost on that basis. Essentially, they pay us on a quarterly basis based on our budget. And so it's essentially like estimated tax payments. They're paying us, and then at the end of the year, we settle up and we bill them, or they, usually sometimes we owe them money, sometimes they owe us money, but it's the arrangement's working and has for many years.
Okay, that's the 2 points I had.
Can I ask a question that may be directed best at Sharon? I noticed a risk management description, which I think was on page 46, I think 46. Without getting into too much detail, have we considered the potential of a cyber incident, which is, we may think we're too small, but there was a small town in Georgia that got totally whacked by it, and given our new prominence for the reasons Jim Horty was just raising, you could see somebody deciding that we might be a bit of an inviting target. So I just wanted to raise the question sort of generally. It's not something we'd want to talk about in detail publicly, but just to raise on a risk management side, both in terms of cyber insurance and more generally on considering that as a potential risk.
Yes, good question. Thank you. So 2 years ago, 2 to 3 years ago, it was before COVID, I know that we met with our insurance folks and increased the cybersecurity policy. And I can tell you that I can't speak for the IT director and his department, but I can speak to the fact that I think in my longtime service in public government, we have one of the best IT departments here, and I know that they're taking every safeguard possible, and they're up to date and certainly in tune with everything that's needed for the security of our services here.
Okay, thank you.
Jeff,
Yes.
are there any accounting changes that are going to be coming down the road that's going to impact the city of Rehoboth's finances?
Leases.
Yeah, so next year there'll be a new standard being implemented on leases. It's not going to materially impact, but what's happening, it happened in the for-profit world, and it's happening in the nonprofit and government worlds now, is that all leases, except for very short-term leases, are going to be reported at the entity-wide level and in proprietary funds as a asset, an intangible right to use asset, and an associated financing of right to use liability. So the effect on the bottom line will be pretty small, but there'll be a lot of work that goes into it from the city side as far as identifying every lease, stripping out any embedded like maintenance contracts if they're material, or supplies contracts embedded in leases. Often copiers, for example, have supply and maintenance costs included in the lease price that aren't considered a lease for financial reporting purposes, and ensuring that we're amortizing that over the appropriate useful life. So that's probably the biggest change that's coming. Yeah, I think that would be the highlight that would impact the city. There's some other things, but they're not really going to impact the city in any substantial way.
Thank you.
Thanks. All right.
Anything else, or?
I don't have anything else. I'm happy to answer any other questions. They don't need to be today. If you think of something later, please feel free to reach out, and I'm happy to answer any questions you may have. Bert and Sharon have my contact information. It's also available on our website. And other than that, thank you for having me on this morning, and it was a pleasure to talk with you. And also, I didn't say it at the start, so thank you to Bert and Sharon and their team for all the work put into this year's audit. This was the first full COVID year where not only the audit occurred in a COVID environment, but all the financial transactions occurred during a COVID environment. So all the work that I know they put into ensuring that documents were ready, that things were provided promptly, and that people were available, whether it was in a virtual or in-person way, to accommodate our audit needs. I really appreciate all that they put into that because I know it couldn't have been easy.
Thank you, Jeff, and especially Bert. Thank you for putting all the time into it. One of the things I would tell the members here is that 4.5 years ago, the city entered into, 5 years ago probably now, a very large project with our financial software. So we changed to the Munis-based Tyler Technology, very robust financial software. And we're still making advancements to that and actually updating on a regular basis. Bert and the IT director, Max Hamby, have been very instrumental in dealing with that on a daily basis and implementing that. So we've come a long way in the last 5-6 years as far as our financial reporting goes. Very, very happy to say that Bert's been a big part of that. Thank you.
I just have one question for Bert. Didn't really have much chance to review the financials. When I review them, if I have questions, may I email you?
Absolutely.
Thank you.
I encourage you to do that.
Thank you.
Anything else? Is that it?
But I guess you want to vote to accept the report and recommend that the commissioners approve it.
So moved.
Second.
Second, third, whatever.
So we should vote. So we have a vote for it.
All in favor?
Aye.
Aye.
Thank you. And Mr. Horty, if you can just put that in writing and send it to the commissioners, email is fine. I'd appreciate
Okay.
that. Or just send it to me and I'll forward it on. And I brought the meeting to order, Mr. Horty, because you were unavailable, but
That's fine. It was,
okay, whenever you're ready to end the meeting and close the meeting, you can do that.
move that we close the meeting.
Okay.
Second.
Second.
We're closed? Okay.
Okay.
Thank you.
Thank you all.
Great. Thank